I've got a really interesting video for everyone today. And yes, I'm back, healthy and ready to start recording properly and trading properly. See, I haven't been able to trade for the last 2 weeks and I've managed to save myself a bunch of money doing so. That's because I fall into one of the 2 different types of trading categories, and I'll explain that in this video. I'll explain how important it is for you to figure out what your trading category is, and of course dive into a crypto market analysis and show the next plays I'm looking at. So we're going to start by looking at the high time frame view. I've got a bunch of lines on my chart, but I'll clear them up right now. And the first thing I want to talk about is the 2 different types of traders in the market. There are really 2 types of traders: momentum traders and mean reversion traders. And I'm going to explain it really simply because, well, those are the best explanations. So mean reversion traders make money when the price stays close to the mean. So if you look here, this is the 100-day moving average. We can even zoom into the 4-hour right now so I can give you guys an example. Periods where the price does this and just continues in a straight line away from the mean, momentum traders make money. So this is heavenly, absolutely fantastic for any momentum traders. For mean reversion traders, let's do rectangles, this, and this are ideal conditions. Now, ideally, you build a system for trading both, but in my experience, traders tend to be way better at one or the other. And it's really important to figure out which one you're best at. I'm really good at momentum trading. That's most of my trading. That's why, if you take a look at 2022, hardly any momentum. Price spent most of the time slowly chopping sideways, up and down, a little bit of momentum here, then sideways again. And I actually ended up making more money in the first few months of 2023 than I did in most of 2022. Because why? Look, we get momentum up, momentum down, momentum up, and now we've been going sideways a little bit. So this slow chop is not what I like to trade. There are definitely some opportunities here, especially because we got big moves up, down, and on the lower time frames, there was enough momentum to do okay there. But most recently, it's not been looking good at all for momentum traders. If we take a look at this here, this is just not ideal conditions to be trading if you mainly focus on momentum. And me getting sick recently has actually helped me avoid a period of time where I would have lost a lot of trades. Unlike your average trading influencer who likes to pretend they never lose trades, if I was trading during this period, I would have taken a loss right here. So if we take a look here, the 100 moving average, something I pay close attention to, broke down. And I was waiting for confirmation, and I would have tried to enter at least a small position and then added as we gain momentum to the downside to 25k. That did not happen. In fact, price continued straight back up. And again, I was completely away from the computer, unable to trade. As soon as we saw this break up above this 27.2k level, which previously acted as a breakdown level, I would have been looking to get continuation to the upside here, above 28k up to maybe 30k. We could have seen what happened there. But again, look, price hit the first resistance and came straight back down. That is a mean reversion. Now, if you guys want me to dive more into how to figure out whether you're a mean reversion or momentum trader and how to develop strategies around it, let me know in the comments below so I'll see people are interested. If not, you guys just want me to focus on the charts, we can do that too. 30k level, I keep hammering down on this, psychologically very significant. You can argue a little bit higher, maybe up to the 31k or 32k. Both of those are valid. Personally, I put a lot of significance on 30k psychological level. Also, if we go historically, it just acted as such a strong support here and here that I give it a lot of weighting. Then the next level I'm paying attention to. I had the 28k level as one of my main levels here, but the more time we spend going sideways, the choppier the market gets, the wider my range gets. So now I'm no longer happy with the 28k because we didn't see the break and now we've had another mean reversion. So I'm going to be waiting for us to get to at least 28.5k now. I've updated it, it fits nicely with the data, and now this is the level I want us to break before I start my momentum systems up again. And again, being similarly conservative towards the downside, I'm now looking for this 26k level to break. That means during this period here, either I'm implementing mean reversion strategies or I'm just on the sidelines waiting for momentum conditions to come again. Now, back in the day, I'd be much more focused on finding altcoins that had sufficient volume and volatility for me to trade. But given the size I trade these days, it's very hard to find altcoins that I'm happy trading. So the best ROI on my time is just not trading. I can backtest, I can study, I can create new systems, I can improve my health. All of these will make me a better trader and able to make more money when I get back to momentum trading. If we also bring our moving averages in as well, they're one of the best indicators of the type of market conditions we have. When they're all bunched up and crisscrossing, it is not good conditions for momentum traders. When they're doing this, fantastic conditions for momentum traders. Notice how close they are together here. This is 2022. This is why we did not like trading in 2022. Moving averages are really close together and we constantly get mean reversion rather than continued momentum. Momentum happens when they fan out, when you see big distances away from each other and continued moves in one direction rather than this. So these would be the two most important levels on my chart right now, 28.5K, 26K. And if we see price start wicking here and wicking here, this range could easily expand if it just keeps going sideways like this. So I will continually expand this more and more as new price data comes in until we see signs that the market environment has changed and we've gotten back into momentum-filled, delightful trading conditions. At least for me. Mean reversion traders are probably having a great time. So when do I expect momentum to come back? We've got upside and downside momentum. To the upside, break of this 28.5K level here. If we get a break with confirmation, we've got a little bit of distance to get up to about this 30K level. Then it's going to be a little bit tricky to catch the long after this level because we've probably got like resistance up until about 32K, because historically, the last time price consolidated here, we had a range of about 32K down to this 28.5K level. So it's not unlikely that we see some resistance again at this 32K level there. But after that, we've actually got a lot of space to run up to 35, 36K levels. So that could be some really fun momentum to trade. To the downside, which, gun to my head, it's probably more likely that we go down than up, but we're not here to be oracles. We're here to make money and operate as traders. Now to the downside, 25K level, this is where macro longs really need to get worried if we break below this 25K level, because then the macro structure has really shifted. It's perfectly fine that we maintain this uptrend, we consolidate sideways for a while, and then we continue going up. Because if you go to, say, the weekly, that looks pretty good. That's healthy price action, up, consolidate, no break in structure. However, if we go up, consolidate, down, break the structure, now we've lost this really strong uptrend that we'd built the entirety of 2023. As for the short term, we've got a good opportunity to place shorts from 26K down to first 25K. As we get down to this 25K level, we're not sure exactly where we're going to establish support. It could be anywhere between 25K and 24K. It's hard to find the exact level, and wherever it solidifies, we'll likely see wicks through down to at least 24K. So there's a lot of opportunity to play this on the lower timeframes. And really, the conclusion is I'll be avoiding trading here. If I'm dying to get to the computer, I'll either backtest my momentum systems, try and improve those, or I'll activate a mean reversion system. And if I'm really just dying to trade, I can dive into altcoins and try find volatility there. But see, what's important to remember is I'm trading multi-seven figures, and I also have other income streams outside of trading at this point. So I want to get maximum ROI out of my trading. And if I'm trading suboptimally, there's going to be opportunity cost for me. I know lots of people that follow this channel are either full-time trading or looking to full-time trade. If that's you, plenty of opportunity to make money. I was making hundreds or thousands of dollars a day in 2018 and 2019. Deep bear market, much worse conditions than this, but I was trading with a much smaller portfolio and there was opportunity all over the place. And you don't need to take my word for it. Not a day goes by where we don't get a bunch of winning trades posted in our Discord. Everyone here trades with the zero complexity principles. This is a course and 6-month roadmap I developed to go beyond my normal trading, and the results really just speak for themselves. The worst market conditions we've had all year, and our members, not me, I'm not bragging about my wins, the members of the community are the ones posting their wins and sharing. If you want to check that out, there's a link in the description below where you can find out more.